Hello, fellow traders, 'tis I, the Rumpled One. It's Monday, July the 1st, the year's 2019. Let's talk trading, monthly open. So this month, we're going to make sure that we keep losing to a minimum. So we're going to use risk and money management on each and every trade, and we're going to work on the method, and we're going to work on the execution and performance. We're going to make sure we get A+ marks in all of those areas. Once again, for those of you just tuning in, and for those of you who've been tuning in on a regular recurring basis, risk, it's really simple. It's the amount of money or the percent of your account that you're willing to lose per trade. Because on any given trade, you don't know if it's going to be a winner or loser. But by having a set risk amount per trade, it will give you the confidence to click that mouse button and enter that trade when you're supposed to. And position size is a function of risk and your stop loss, or stop loss is a function of your risk and the position size. So for some of you that keep the position size the same each and every trade, your stop loss is the same distance from your entry. Sometimes that might not be a good thing. That's why you might want to consider using adjusting position size rather than your stop loss. And remember, when you enter a trade, you don't have to go full in. You can go half in or a quarter in. So let's flip this chart over to monthly just so we can take a look here. You see we opened in the upper wick zone of the previous month right here. We exited. So you see we had a high of 123.34. So that's about 17 pips to the upside. And then price started dropping, as you can see, and we're now exiting the upper wick zone of the previous month's candle. So once again, we can use the same analysis that we use on the lower time frames on the monthly as well. And you see here we've got that. I believe this is the monthly pip. No, this is the previous. I'm gonna have to remember here. TRO on the dots. I believe this is the previous month's pivot. So these are the pivot points. As you can see, these monthly pivots get taken out. So look for price to hit 122.18 on that short. Might be a good place to take profit, and just use your price action to tell you when to exit the trade. Now, one other thing to look at here is you see we filled the gap yesterday on the weekly, so we can switch back to weekly now. You see we filled that gap. We're exiting the upper wick zone of the previous week's candle as well. And we're heading towards that pivot of 122.37. Now we still have other gaps that need to be filled here. So there's going to be opportunity in all of these pairs to fill that gap. You can see we've got a red day, a red month, red week, and we're still down 290 pips from that yearly open. And on this particular chart, the mid dots are showing the previous candle's midpoint as opposed to the pivot. It's hard to see the difference in color, I'm sure, but this is magenta and the other is purple. Now, you see here we've got the first day of the week. We got a huge range here, a nice range this first day of the week. There's the first day of the year. We missed it by what, 17 pips, getting back in that zone. Oh, I thought I had changed that. Oh, I know what happened. I changed it on a different um, profile. Hold on just a sec. Okay, I reloaded the templates and saved the profile, so now we'll be straight here. You can see we are below July 1st here. Oh, one thing. There was a trader. I think they sent me multiple emails asking me if I don't respond to you within 24 hours, a request, especially if it's for code or a template or something. It's probably because I'm not home or I don't have my computer with me, so I can't just send it to you. So just be patient. If a week goes by and I don't respond, or 3 or 4 days, that's a little bit different. But usually I respond as soon as I possibly can. So it's not a case of the squeaky wheel gets the grease here. So once again, we are below the open. We're putting in that first day's range right here. You can see price seems like it's still dropping 1 pip off the low. So green rats, get ready. Still, we're not going to have an inside bar for a while. And you see here, there's a couple of inside bar trades to anticipate. On the daily, there's a few on the weekly and also on the monthly. Now, you can see here on the monthly, there was 3 bars ago, but we're below that. And on the weekly here, you see the weekly was 9 bars ago, and we're below that. Range 87, but we have 5 over 100, so it looks like things have picked up a bit. We're now in that lower wick zone of the previous day's candle. You see we exited the upper, returned, exited the upper on the downside, and now we're in the lower. Monthly H1 lowest open just got put in here because it's first day of the month. So look for a reversal at 122.47. Be careful though, but we did fill that gap. You can see that right there. Okay, on the buy zone, we had a negative bias. We also had a gap fill. I believe when I opened the chart the last time, it was somewhere around here late last night, but you can see here, you got a trigger to the upside here, but not making new highs. So obviously that scratch trade, you take the short heading towards the pivot, and you see we just filled that pivot a couple of hours ago. As I said just a few moments ago, green rats looking for a reversal. Weekly pivot 122.36, monthly 122.18, weekly pivot 122.37. We filled it, so we're looking to fill these two. A couple of good targets and good reversal areas also. And we took out these pivots here. So now we have no missed pivots for the month of June. We have 2 for the month of May, and all the missed pivots are above the current price. Price action, 2 ball at the bottom. Look for price to reverse. Notice that price opened in one area and exited to the other. It's just so funny. I see all these other traders always use that price action, but they never ever define it. And it's so simple. But they like to keep things shroud, the simple and the mysterious so they can appear to be the wizard or the magician so they can sucker you in and getting you to buy their books and tapes and go to their seminars, buy their robots, and pay hundreds of dollars for indicators. And most people aren't aware of the power of persuasion and when it's being used against them or on them. And that's why I say when it comes to trading, I think the most important books you can read are psychology books, not trading books. Because most of the losses that you experience are self induced. It's not that the market was against you, it's just you weren't with the market. The market's just doing what it does. But when you believe in things that you don't understand, it's superstitious, to quote Stevie Wonder's song. And that's what a lot of traders do. Maybe I should make a video on superstition. Um, if I play the music, I wonder if how long I can play the music in the background before YouTube uh, gets mad at me. But the point is that you'll have people out there talking about stochastics and MACD and a few of these others. But if you ask them to explain it, well, how's it calculated? They can't do it. So they believe in something that they truly don't understand. But you see, I believe in the wick zone because it's not a belief. It's something that's a mathematical statistical fact that price doesn't, once it enters the wick zone, there's, a 70% chance on the daily on this particular pair that price is going to exit that wick zone. As you can see, it entered, it exited, entered, it exit, entered, it exit, it entered, it exit. It's now entering again. It entered here and it exited. So sometimes a little, sometimes a lot. But, knowing that, coupled with the fact that I can put a stop loss on my trade, gives me confidence to trade the wick zone over and over and over again. In fact, one of my good buddies, shout out to John, says it's his, out of everything I've done, he just really likes the wick zones. And as you can see, just trading price at these horizontal lines, the direction of the cross, proved to be profitable. But remember, fellow traders, these videos are for educational purposes only, and that your results may differ from mine. And hopefully the CFTC or CTFC or whatever alphabet soup organizations like to go around and fine people, that satisfies their requirements. I tell you, what's the world coming to, right? Okay, you can see here at the tick level, a slight downward movement, but it basically just seems to be oscillating. And the Einstein line, trader just asked me a question via email about should we focus on the H1 candle color. Well, first off, remember, it's relative to when you open the chart. So even though the candle color might be one way, what is it to you? So right now, we have a green, well, we don't, we have a red H1. But yeah, you can definitely use that to your advantage. So for example, if on the next, at the end of the hour, say price is here and then it starts going up and the candle's green, and there's still more gas in the tank, meaning that H1 range is below average and below the frequency distribution, the mode of the frequency distribution, then you can go ahead and take advantage. So this month of July, fellow traders, just keep in mind the things we talk about, and it's not what you trade, it's how you trade it. So go out there and drain the banks this month.